What does a recent patent submission, well, from the last couple of years from Sony, as well as them building a new development team to work with Visual Arts and Naughty Dog on a AAA title, as well as in conjunction with some snippets of information or breadcrumbs from Hedera, all have in common? I'll dive into that in this video, and then as well towards the end of the video I'll be looking at some updates to do with staking and APY over on the network. So Sony is building a new development team to work with Visual Arts and Naughty Dog on a AAA title. The announced game has a clear vision and plan to release. Not only that, it's in collaboration with the PS5 Visual Arts studios to make this new AAA game. We've seen job listings for senior product roles at PlayStation referring to the new team, and states that it's being put together to work on a new project. Sony PlayStation is building a new internal game development team in partnership with PSS Visual Arts, an award-winning full production group that specializes in animation, motion capture, cinematics, art, and scanning. Now, I've spoken recently quite frequently about AAA games and metaverse, Web3, and basically the ties back to cryptocurrencies in general. Of course, we've got things like Lithos, the AAA game being built on top of Hedera Hashgraph, and there are several others across the ecosystem being built on either other DLT networks or Hedera Hashgraph specifically. Now, why I am singling out Sony is because Hedera recently momentarily followed Sony on Twitter before unfollowing, so these breadcrumbs keep continuing. Hedera, or Hedera specifically on its Twitter account, actually only follows governing council members. We can see there the other governing council members, the recently added Dell, Aberdeen, Ubisoft, ServiceNow, DBS Bank, Shinhan Bank, and of course the rest of them. And we can see they did actually briefly follow Sony. So potentially someone working for Hedera and sort of maintaining their social media side either did this in error, completely just was viewing Sony's Twitter account and clicked follow by accident, and then of course unfollowed, or prematurely clicked follow as well, and that was the reason why they were looking at it. So there's some ties there between Hedera and Sony based on what's been happening on the Twitter side of things, on the social media side of things, but also we can pull in that gaming information of that new team because Sony over the last couple of years actually has applied for a patent, this US 20.220.358450 patent for tracking unique in-game digital assets using tokens on a distributed ledger. So of course this links back if they are developing a AAA gaming sort of team to build this new AAA game that they're looking to implement. And then of course they're submitting patents for tracking unique in-game digital assets. And of course this is a major shift we are seeing for online gaming, particularly in the AA and AAA space of online gaming, is that of course any assets that are purchased within the game are sort of non-fungible tokens. They are immutably sort of stored on a DLT or blockchain, whatever it may be, the technology that's employed. And of course, they are then completely tradable outside of the game as well. And that, of course, then bridges any in-game sort of playtime, and it becomes a kind of play-to-earn experience. And of course, you can sort of get those assets out of the game. Big shift for online gaming. And of course, this will be a major use case for cryptocurrencies going forward. Now, if we look at the background, we can see this, individuals of this patent application. Individuals often find it meaningful to own or use unique physical items related to respective celebrities or activities, whatever it may be, in-game. In some video games, a player can use digital assets during gameplay. Such digital assets can include, for example, special characters, costumes, items, etc. In traditional video games, though, multiple instances of the same in-game item exist within the same copy of a video game or within different copies of a video game. So of course, again, this can be solved by NFTs because you can mint them with different NFT numbers effectively. Anyway, if we scroll right through this patent application, eventually we stumble across effectively how they're going to employ this, and the resulting structure is via a directed acyclic graph or DAG of blocks, where each vertex block includes a hash of its parent vertex block, rather than a linear stream of blocks as in a blockchain. So they're talking about using a DAG, and of course Hashgraph is a DAG. A DAG ledger may also sometimes be referred to as a web, a tangle, or a hash graph. And of course, hash graph being effectively a previous patent, of course it's now open source, but being fully utilized by Hedera Hashgraph. That is the underlying technology and the only DLT that actually uses Hashgraph. So for them to actually single out Hashgraph is a subtle nod to potentially them using Hashgraph as the DLT of choice for this particular patent, which of course will then be used in future AAA games that they're looking to build, and hence why they are hiring. So this could be coming all full circle. We've got the breadcrumbs from the Hedera Twitter account of them following Sony, and they only follow governing council members. Sony are releasing patents for in-game tokenization effectively via things like NFTs, and they are singling out DLTs specifically, such as Hashgraph, and they are building a team. So speaks to reason that potentially the next addition to the governing council of Hedera could actually be Sony. And of course, this would be a massive sort of integration on Hedera's part, but also on Sony's part for the technological advantages that Hedera Hashgraph brings. And of course, the massive library of games PlayStation, PS5, PS4 obviously currently have and are looking to develop into the future. Absolutely phenomenal stuff at the moment. Of course, this is only breadcrumb trails, but the evidence is stacking up in favor potentially of Sony partnering or becoming a member of the governing council for Hedera Hashgraph. At least we know anyway, Sony are looking to move into the DLT space. And of course, what better than Hedera Hashgraph? Looking at the abstract as well from this particular patent, it talks about how a new block can be generated for, appended to the distributed ledger, identifying the changes to the history of the digital asset. The new block can include hashes of previous blocks. And you've got things like changes of properties to the digital assets, such as ownership, visual appearance, or metadata can be identified in a request to update the history. Of course, all of this kind of stuff is possible in any DLT, but works incredibly well via the Hedera token service and, of course, the consensus services on Hedera itself. Anyway, let's sort of sweep those breadcrumbs to the side for now. Of course, that'll be something that'll keep you guys up to date. Make sure you are subscribed to the channel in order to view those future videos. Wanted to touch on some macro stuff at the moment. On the Fiat and Greed Index, of course, majority of cryptocurrencies have been doing a bit of a pullback recently. We are sitting at 56 in the greed territory still around where we were last week and sort of back to where we were last month. Now, something to take into account for this sort of sentiment indicator, as we've seen before, extreme fear can obviously be a sign that investors are worried and, of course, could be a buying opportunity. Although when investors are getting too greedy, that typically means the market is due for a correction, and that is kind of how we're seeing this play out at the moment. For me personally, I am still buying Hedera tokens. Anything sub 10 cents, I've said this for months and months and months, anything sub 10 cents for me is definitely a buy. Of course, we are looking at future price potential the next 2, 3, 4, 5 years of easily surpassing $1, in my opinion. 50 billion tokens of max supply at $1, $50 billion market cap, still wouldn't even put it in, might just put it in the top 10, wouldn't even put it in the top 10 if we were looking at previous market all-time highs at the end of 2021. And of course, many are starting to realize the potential of Hedera Hashgraph now. You only have to look at places like Twitter when I release infographics looking at transactions per second, and you've got lots of people in complete disbelief at the sheer power of Hedera Hashgraph as a DLT itself. And we're starting to get a lot of those conversions across to the technology, realizing how good of a chain it actually is. More news as well from the traditional finance world. $482 billion German banking giant DZ Bank will be integrating Bitcoin and crypto into its asset management services. That's come from Cointelegraph. Of course, I cover this on a regular basis. I have been doing it for months and months and months. We have seen tons of different banks looking to open up their assets under management, their clients, whether they be retail or institutions, to things like Bitcoin and cryptocurrencies. And of course, this will play a very important role in the next cycle top that we see across cryptocurrencies, because of course, we are seeing more capital, fresh dollars flow into the market. We see higher market caps for the cryptocurrency projects that are, of course, worth people investing in. Some of those are things like Bitcoin, Ethereum, your mainstay too. And then you've got the other altcoin projects like Hedera Hashgraph, which of course will receive a large share as the noise continues to be made across socials and people begin to realize its potential. HTS token growth as well has translated to an upward trend in trading volume since the start of the new year. In the past 2 weeks, SourceSwap's volume has surged massively to an average $1 million per day being traded, generating nearly $50,000 in swap fees for liquidity providers and Source stakers. So of course, that is one of the important things there. If any of you guys own the Source token or you're in any liquidity pools, you're providing liquidity for these swaps to take place, you are receiving the main bulk effectively of those $50,000 a day in swap fees. And of course, that is reflected in the APYs that you see. I have got previous videos on the channel showing you guys how you can stake things like Source tokens, as well as provide liquidity in different liquidity pools, as well as drawbacks such as impermanent loss. So if you're interested in that or want to learn a bit more, check out those previous videos on my channel. You can just sort of go to the video section and search for something like liquidity, and you'll be able to find those videos. I am also still waiting for the announcements from SourceSwap about stages 2 and 3 of their Source token staking. Don't forget, we're only at stage 1 at the moment. So you stake your Source tokens to earn X Source. And of course, that multiplier goes up, similar fashion to how a HBAR and HBAR-X works for stayed as liquid staking. But there will be some more phases in the future where you can then use those X Source tokens to earn additional HTS or Hedera token service tokens from various different projects that are of course partnered and utilizing SourceSwap. So basically there are more ways to earn a little bit more APY or money off of those Source bags if you have them. Again, I'll cover those when the video comes out. Interesting tweet here from Hedera themselves as well. Real-world asset tokenization will take the world of Web3 by storm. Just ask some of our governing council members. You've got Aberdeen, DLA Piper, SB Group, and Avery Dennison all tokenizing real-world assets. Of course, I covered in a previous video, DLA Piper has done $500 million worth of real-world assets being tokenized on Hedera. What does that mean? Many of you may ask. Well, let's take an example of something like a house. A house, for example, could be tokenized on the DLT itself, and then you could transfer the deeds between people quite easily by finding a buyer and a seller of those particular deeds. And then you wouldn't need to go through any of the traditional sort of marketing for selling a property, estate agents, etc., all the rest of that. You could just find a buyer online and I could transfer my deeds via an NFT. That's effectively how this works, right? NFTs are tokenized assets in their simplest form. And that's why I've spoken at great length as to why the actual burgeoning NFT ecosystem on Hedera is actually very pivotal for developments of things like real-world tokenization of assets. They go hand in hand and they are very important. Even if many people think they are just silly images, they really aren't, because it enables things like this to happen. This came off the back as well of a Ethereum guy basically talking about a mega trend is on the horizon for crypto. Tokenized real-world assets, or RWAs, are now being issued on public blockchains by a growing number of Web3 projects and institutions alike. So there was 4 institutions there that are governing council members that are already doing it on Hedera. Why would people care about crypto and DeFi in the first place? Well, you've got things like atomic settlements, transparency, user control, reduced costs, and composability. Tens of billions of dollars have been absorbed into DeFi. When faced with extreme market volatility, rapid deleveraging events, and the collapse of centralized crypto institutions, DeFi has remained resilient. One major exception, of course, stablecoins. By tokenizing USD on chain, we have created a superior version of the dollar, one that is natively digital, programmable, composable, and atomically settled. This is why there is now, of course, $132 billion of stablecoins circulating on chain. The adoption of stablecoins in DeFi has proven that there is real market demand for tokenized RWAs, or real-world assets, and they are simply the evolution of finance, where public blockchains serve as the golden source of truth rather than taking place across siloed ledgers that require reconciliation. Tokenized currencies, commodities, and securities bring many benefits. Delayed time +2 settlement is no more. Reduce the need for costly intermediaries. So in the example of housing, which is what I was talking about, you maybe wouldn't need things such as estate agents or brokers or whatever it may be, because you can see the assets live on the chains. Audits can happen in real time. Liquidity is brought to private markets. Entirely new financial products can also be created. So there's some of the benefits of real world assets on chain. HBAR Foundation as well, in one of their latest tweets, are excited to announce the launch of 𝗟𝗜𝗡𝗏𝗏, a first of its kind Web3 e-commerce content creation platform leveraging the power of artificial intelligence alongside Hedera to streamline advertisements. Today, 44% of digital advertising budgets are lost to advert blindness because they are seen by web users out of context, effectively serving incorrect ads to people. Alongside this, publishers also struggle to monetize their audience because website users are put off by the number of adverts. Leveraging AI and real-time personalization algorithms, 𝗟𝗜𝗡𝗏𝗏 combats these issues by enabling brands to reach potential buyers in the right context. This is achieved through partnerships with content publishers and embedding e-commerce microsites within their content or websites. Through 𝗟𝗏𝗡𝗏's AI content generation engine, it takes less than 10 minutes for a creator to turn an idea into content and match that with the right products through real-time personalization algorithms and then publish to the relevant website. They are leveraging the Hedera token service, or HTS. Unthink then offers tiered benefits to its content creators through NFTs that work like loyalty tokens to claim rewards from multiple parties, including brands, agencies, and publishers. And of course, I will link that HBAR Foundation org article down below for you guys to read a little bit more about them. Hedera as well as their major services, update and refactoring, things like Rust, Swift, Go, and Java SDKs are on track. Tezos has delivered an update for the protocol, and Aptos focuses on Aptos Node and Aptos Network projects. But weekly smart chain development update, we can see the number effectively of lines added, excluding from front-end data configurations and own repositories of programming languages. Hedera is massively ahead of the rest of these different chains. So effectively, this is the number of developers that are modifying, changing, and updating lines of code for the different SDKs that underpin the network itself. This is, of course, can then be used as a proxy for the amount of developers or development activity happening on Hedera, i.e. Hedera is continuing to build massively, and they keep topping out loads of these different metrics for developer engagement. Again, really good stuff to see. And of course, we are seeing that through the amount of sentiment that Hedera is recently seeing, the number of builders, projects, decentralized applications, and finance that are moving across to the chain. Right, last thing before I wrap up the video then. Wanted to look at staking on Hedera. There have been some changes recently. Saw this pop up on Reddit, and it did circle around on Twitter. Around 750 million HBAR were actually unstaked from 𝗟𝗓𝗓 the other day, and it wasn't the HBAR Foundation. So 𝗟𝗓𝗓 themselves have basically said that it's likely a whale or some kind of institutional player, and they've basically pulled out 750 million from the pool on 𝗟𝗓𝗓 Hedera. Now, of course, 𝗟𝗓𝗓 Hedera is a liquid staking platform. I do have a dedicated video on the channel looking at different ways to earn yield across Hedera, again, with the benefits and drawbacks of each of them. So, for example, using 𝗟𝗓𝗓, you've got third-party risk, but a slightly higher APR or APY return effectively, versus native staking, of course, a lot more secure. No third-party risk, but you have a reduced APY. Now, I'm not going to go into sort of rumors as to why someone's pulled out 750 million. Could be tons of different reasons, tax purposes, liquidating assets, whatever it may be. However, of course, there is an inverse relationship between the APY and the number of HBARs that are held by 𝗟𝗓𝗓 within these particular pools. And as a result, the APY on 𝗟𝗓𝗓 has now jumped to 10.45%. Of course, this is nearly 4% larger than what you are receiving on native staking. Therefore, it may be sensible for some of you guys to go ahead and potentially move some of your native staked HBARs from your Hashpack wallet or whatever it may be back into HBARX and earning slightly more yield, almost double really, when you're kind of looking at it, what is it, 80%, something like that, additional yield taking place. Now, of course, 𝗟𝗓𝗓 are secure. I've had several different interviews actually on the channel with 𝗟𝗘𝗙𝗘𝗥 himself, which is one of the guys that works for 𝗟𝗓𝗓 Hedera. And like I said, there are videos on the channel looking at the sort of drawbacks or benefits of using a liquid staking platform such as 𝗟𝗓𝗓. These guys have been around in Hedera for well over a year, and of course they launched before native staking was even a thing. I urge you guys to check out those videos, but I wanted to give you a bit of information what is happening on the APY there. There is at the moment an increase to those rewards for using HBARX as a token. If you guys enjoyed this video, make sure you leave a like, drop a comment if you've got something to say. Also, make sure you're subscribed for future content. Let me know if you have any questions, and I'll catch you in the next one. Cheers.